It is bound to happen. So, I apologize for that. But indeed, if you do enjoy the content, please consider dropping that like and subscribe. I hope you guys will tune in and have some nice questions for me today. And I do hope you're having a good week, that things are going well for you, that the world is treating you well, as much as possible, right? And please let me know if you do, if the sound is good, if you can hear me well, if you can see me well, that would be great. So thank you very much. So today I would like to kickstart a little bit on the topic of the markets today. So basically where we stand. Now, you may have heard me ad nauseum talking about this, but this is actually quite important, right? So as I mentioned before, people are always paying attention to the stock market. People are always I see that someone has joined. Welcome, Sarah. Thank you for joining in. I highly appreciate it. And what I wanted to start, and it's going to be a live stream about half an hour. We'll see what it goes to, but I am planning to go about 30 minutes on this one. And I have mentioned this actually multiple times, where people are always looking to the wrong side of things. They either look at trailing indicators or instead of leading indicators, and they typically look at the smaller markets instead of looking to the big one. I have mentioned this time and time again, and here it goes again. The bond market dictates the value of all the other markets. That's it. The very boring debt market that barely, moves around over long periods of time, it's been one of the most volatile in the past few years that we have seen. Now, if you look at TLT, which is basically the index that tracks 10-year, it has a mix of 10 and 30-year bonds, you will see that a lot of them, that index is actually down quite a lot from its peak. I think something close to 50%. Of course, this is the asset class that Harry Dent and Steven Van Meter recommend to everybody, so you should know already how bad it is. But the point is, the bond market's about 3 to 4 times the size of the stock market. It's, 400 times the size of crypto, about 40 times the size of gold. So that market dictates everything else. But the thing is, people are always with the same comments, right? Oh, it's the banking crisis. Oh, it's the commercial real estate. They say, no. If something dramatic is going to happen, which is always a possibility. I mean, nobody can rule it out. Nobody can say, oh, yeah, no, that will never happen, blah, blah, blah. Every time people say that something can never happen, that's exactly when it becomes more likely to happen. And the bond market is actually under quite some stress. Now, from what I've been seeing here in my cycles, the oil market either already topped out or is about to top out by the end of the week, by the end of the month, which is kind of funny, because if I'm right, all these hedge funds which are going all in oil will get caught on the wrong side of the trade. So let's see if that happens or not. But it should be topping around this period. And what you see here, and you see this constantly, if you think about it, what happened yesterday with the Fed stopping the hikes is actually a positive for the market. But because the bond market is selling off quite a lot, 2%, 2.2% in the TLT is quite a lot for that specific market. That brings everything down. Because if that market starts to get very volatile, if that market starts to show signs of collapse, then everything else collapses. Okay, the stock market comes down, crypto markets will come down, at least in the short term, and precious metal markets will also come down. In the short term, I do think precious metals and crypto will actually benefit for prolonged periods of the US dollar or the bond market going down. Because don't forget, what are bonds? Bonds are future dollars. That's it. So you should look at those together. Now, what did I tell you many times before? Where to look for potential black swans? Easy. China, because everybody thinks that China is going to overtake the world and overtake the US, and so nobody thinks they can do anything wrong, just like Japan 1980s, same story. So that is number one. Number two is, what is the safest instrument that everybody likes? Government bonds. Okay, so based on the psychology of things, that is actually the ones that I would be concerned. And guess what? Every major correction in the stock market or anything that has been happening, you see a sell-off in the bond market first or simultaneously. Now, where are we right now? We are actually in the same sideways movement that I've been talking about, between 43.50 to 45.50 in the S&P. We ran up to the upper side of the channel, said, we're getting overextended, it's time for a sell-off. Okay, here it is, the sell-off. Now, if we start breaking levels, 4300, 4250, then it's bigger reason to get concerned. But so far, the only thing that I see is we are visiting the bottom side of the channel. But, very importantly, all these financial experts, all these financial gurus think that government bonds are extremely safe. People like Stephen Van Meter, people like Harry Dent always say this, and it always blows up on people's faces exactly the assets that everybody is very happy with. Now, looking a little bit beyond the next 2 or 3 months, right? Yesterday, something happened which should get everyone concerned, and I'll tell you what it is. So, in the past, everyone was expecting a big recession everywhere. On YouTube, on YouTube it was going to be a depression 2.0, but even on Bloomberg, CNBC, soft landing, soft recession, small recession, blah, blah, blah. And you may recall, because this came from, for the ones that have been here since the start of this channel, I've been saying that because everybody is waiting for recessions, you are not going to get one because markets work the other way around. So what happens is actually quite simple. If everyone is expecting a recession, everyone is more careful with their money. If everyone is more careful with their money, they tend to spend it on less stupid things. Maybe they get a second job to prepare themselves for the recession. So all these attitudes, the fact that everybody's constantly recession, drives businesses to behave a certain way and consumers to behave a certain way. And because of that behavior, the recession ends up not happening. But yesterday, the Fed now expects there's not going to be any recession. CNBC starts to talk about no recession. Bloomberg starts to talk about no recession, which is starting to make me think that maybe next year or the next, so 2024, 2025, you're going to really start seeing signs of recession. Now, I think their hopes is that the inflation will be low enough so they can reprint money once again to make it go away in preparation for the US election. So I think that is the goal that they have. My opinion, quick update on the prediction that I made months ago, is we're still going to see new all-time highs by Q1 2024. That means 31st March 2024 on the Nasdaq 100, S&P 500, Dow Jones, Russell 50-50. I don't think, it's difficult to say because of the regional banks. So that's why I always told, look, I focus on these big three, and if the smaller caps get there, fine. By the way, guys, if you're joining in, consider dropping that like. It greatly helps the stream. and it greatly helps the channel as well. If you guys are not subscribed, please consider dropping that subscribe as well. It's the only thing that I ask. Don't ask for money, don't sell you anything, just here sharing the good stuff with all of you. Now, so in summary, look at the bond market. That will tell you what's going to happen with the stock market. And since everybody now is talking about no recession, maybe it's time to start to get concerned about recession. Oh, but does that mean there's going to be recession right now? No, it doesn't mean that, but it means that most likely within 12 months to 18 months, you're going to start seeing some fireworks. Hopefully, the idea is that inflation is low enough so they can print money once again. And I think that's going to be the point. And also, they do need something major to introduce CBDCs. So now they are hoping for a big crash or for something really bad to happen, so they can justify bringing up CBDCs as if that would solve anything. It's just an attack on your freedom. And I mean, thank God there's something called regulatory arbitrage in the world, meaning that not all countries have the same regulations. So what I'm looking at is potentially countries that can make me go away of this situation. Crypto world, which is our main focus here on the channel. There has been some good news coming from Mt. Gox, which is good news for the market, bad news for the people involved. They've postponed the release of the coins once again. So Mt. Gox has about 140,000 Bitcoin, which at current pricing is about, quick math here, $3.8 billion. So it's a big, a big sell-off that seems that it's not going to happen, at least in the short run. Every day it goes by, we are approaching the famous Bitcoin halving in March, and the closer we get, of course, to the bull market. Now, I did mention that when everybody was so afraid of September, right, as it used to be said, I was thinking, okay, since I see so many people so afraid of the September month, maybe this time around will not be such a bad month. And so far, it's not been such a bad month. Not sure if it's actually up or not, but we do see the market is holding up quite nicely. You see hash rates going up. You see active users on Ethereum, daily active users going up. You see a lot of developments on Pulse chain for new projects. You see a lot of developments on Cardano, Chainlink. Maybe it's going to be a good project if the next meme of the next cycle will be interchain operability. Sorry guys, my setup today is a complete mess. I just came out of work, so bear with me with these little technical issues. But what else? So the projects that I like, I do see some developments on the back, or if you will, on the background, so on the behind the scenes, which is basically the pillars for the bull market are created during the bear market and the recovery year. But because price doesn't follow it, or price doesn't happen at the same time as the development, people tend to not pay attention to this stage, and then they only care about the green candles. You still see a lot of people pissed off, you see a lot of people demoralized, a lot of people sad, a lot of people suspicious of any rally that is typically of end of recovery year. This is a funny thing, but people like to buy Bitcoin. People will not buy Bitcoin at 25,000, but people will definitely buy Bitcoin at 40,000. There's a magic number that we need to go above. That is $38,000 on Bitcoin. Why is that? Because that's the average price where the average person will turn green at the moment with their Bitcoin investments. Although I don't like Bitcoin that much, I think it's old technology. I think it's bad code. Bad code in the sense that it's prone to bugs. That's why they had inflation bugs in the past. But it was the big innovator in the first place, and it still leads the market. So for all the people that say, I love altcoins, they're full of scams, but the ones which are good, a lot of people tend to dismiss Bitcoin because it's kind of the old thing. But I don't care what people say. Bitcoin moves, the rest of the market moves with it. Then it can move more up as Bitcoin goes up, or more down as Bitcoin goes down. But there's this, yes, for short periods of time, this can be a disconnection, particularly for new projects. But rest assured that after a few months, they all kind of move in the same way. Oh, Moho, I see that you finally managed to catch a live stream. It was always very sad that he always missed the live streams. So I'm very happy that you guys, that you could make it. By the way, if you do, don't forget, drop that like, drop that subscribe if you haven't done it yet. So I was just referring that every day that goes by is every day we get closer to the crypto bull, but we are still at the later stages of the recovery here. I get it, believe me. I also share the frustration. It's like watching paint dry. We are in this sideways movement. There are some days we barely move from the same place. We go up a little bit, we go immediately down, and we don't leave the same spot. But look at the fundamentals behind the scenes, and that to me is the most important. Now, as you know, guys, I do like the Richard Art ecosystems. He's been dropping some tweets. It seems to me that he's willing to fight the SEC, and he already gathered a huge bunch of legal arguments that can be used not just by post-chain ecosystem, but also by the other ecosystems that are being targeted by the SEC. In case you've been missing some of the Senate hearings, basically Gary Gensler is smashed across the board, and during all the hearings. And one of the reasons for it is actually, forget about crypto now. He's been pissing off even the people in the legacy world, if you will, in the stock market, because the guy just comes up with huge bunch of regulation that makes a very little sense most of the times. It creates a huge issue for companies, and it brings nothing new. So he's just, I think there was a senator that even told him that he should prioritize quality over quantity, which is kind of an admission that everything that this guy is doing is complete clownery. So I do expect that sometime in the next 12 months, he will be pushed aside. There's going to be a very good excuse for it, some sort of personal issue, some sort of, I don't know. They will come up with something, because I do believe he pisses off both Democrats and Republicans alike, both from the legacy world, from the crypto world, from every world. He upsets everybody. What else? I would say one thing to pay attention will be the timing of the Bitcoin ETF, BlackRock Bitcoin ETF. That will be very important. It will be the first of many. You may recall that I had a funny feeling about an Ethereum spot ETF, and guess what? ARK Innovation Fund, of course, applied for it. And I do think what's going to eventually happen is that the SEC will throw a bone to their quasi-government friends, so the people on the BlackRock side, and eventually they will get approval. They need to make themselves sorry guys, I'm still a bit sick. I think they will still make themselves play a bit hard in the beginning, because they've refused so many spot ETFs that they cannot just give it immediately at once to the BlackRock, so they need to play a little bit the political make-believe game. But what most people get it twisted, and actually even in the comment sections I've been seeing this, is I'm not in favor or I'm not against the ETFs coming out. I do think they're going to happen, regardless of me liking it or me disliking it. I mean, that is completely irrelevant for this situation. I do think in the short term, the coming of institutional money, which is way bigger than retail money, is going to be bullish for the price in the short run. Now, to be clear, because people always confuse this, I do think there's going to be a run-up of price right before the ETF gets approved, and once it gets approved, it's a big sell the news event. Now, afterwards, after a few months, institutional money can come in, which should be very bullish short term for the price. But it has the potential to mess up with the cycles. It has the potential of starting to get manipulated by big institutions. So in the long run, I agree, it's not very good. But in the short run, I think it will be very bullish for price. When I say short run, I'm talking 1-2 years. Oh, by the way, Brandon, thank you very much for your comment. Guys, don't forget, if you're joining in, drop that like. So thank you very much. And that subscribe if that is applicable to you. And this is something that what I'm trying to do is, instead of crying about institutional money coming to crypto, I'm trying to see how it can benefit me. And maybe I can make it so big in this cycle that I actually don't need the next cycle. See what I mean? So, I plan to always be engaged and involved in the space, but it's just a reality. The industry was super new in 2009, was super new over the last 10 years. The longer it goes by, the less new it becomes, the more mature it becomes, the less it pumps. So that's why in the last cycle, Bitcoin hit 69,000, which is about 350% of the previous bull market in 2017, which hit 20,000. So if you look 20,000 to 69,000, that's about a 3.5 times or a 350% gain, which versus the stock market is great, because the stock market takes about 14 years to double. In this case took 4 years to more than triple, but compared to what we've seen in crypto is not that much. But in any case, something that we need to be aware, and I do believe that the BlackRock CEO is actually telling the truth. He sees blockchain and crypto to be very useful for the tokenization of securities. That means basically bringing the stocks in the stock market onto the blockchain. And you already see examples of this, because you're starting to see companies issuing bonds instead of issuing bonds to the market as it's typically done. And then you guys can go and buy bonds, with a broker from a company in the US or in Europe or in Japan or whatever. They are starting to issue bonds on the blockchain and basically testing the bringing of the traditional financial instruments that you would see in companies and in the stock market or in the bond market into the crypto market. So this trend is already started. Small deals, granted, go through the most well-known chains, Ethereum, Polygon, etc. Although, personally speaking, I don't like Polygon that much because it has admin keys, which mean they can just invalidate your coins whenever they feel like it. It's unlikely they're going to do it, by the way, but you're introducing counterparty risk, which is the opposite of why crypto was invented. So when you do it, you get to be in the headlines of losing all your money. By the way, guys, 12 people on the stream. Thank you very much. Please drop that like and subscribe. I think I'm going to go for another 5 minutes, If you guys have a few questions for me, drop them. I'll try to answer the best that I can. I cannot push it too far because my throat, you may have noticed through the video, it's still not great. So unfortunately, I cannot stay here, at least today, for many, many hours. But I tried to do my best. And what I wanted to maybe conclude a little bit will be on the meme stocks. So you will see King Louis the First. Okay, wait 1 second. Karim, thank you for coming. What is my largest crypto position? My largest crypto position is divided amongst Pulse Chain and PulseX. I've disclosed my average cost in Pulse Chain, PulseX, and X, and I've disclosed my average cost previously in other videos. So I think if you go to my playlist Retirement Packs, you will see it. For those who don't know, they are all projects from Richard Hart. X, it's a version of Bitcoin, did 10,000 fold or 1,000,000% in the last cycle. Pulse Chain is a fork of Ethereum, cheaper, faster, and you got ERC20 token copies for free on the chain. PulseX is the version of Uniswap, but it buys and burns tokens for every transaction that is made, and in the future is expected to allow you to single site stake and earn other tokens. Now, the project has been operating without flaws, hasn't been hacked, hasn't been basically getting, exploited or anything like that. But pricing performance is not great. That's a fact. And to me, my target, but this is about me, you guys do whatever you want. My target is 2025. That's all that I care about. So when I'm looking at my positions at crypto, I'm looking at 2025. So that means that if my positions go up 5-fold, I'm not going to come here and celebrate like crazy. The same way that, of course, I mean, if they would go up 500-fold, yeah, I mean, sure, then I would celebrate like crazy. But if it goes up 5 or 10-fold, and we are still not in 2025, the ETF is still not out, we still didn't fall out of the parabola when Bitcoin runs up. It's still not 12 months after the Bitcoin halving. By the way, altcoins peak between 12 and 18 months after the Bitcoin halving, in case you've never paid attention to. So unless I see a lot of those things happen, I won't get out of my position. So that is what I'm planning to do. Now, finally, quickly on the meme stock, guys, because this will happen in crypto, so I want to get you that you are aware of this. Of course, there are already videos about AMC is going to have the short squeeze, and this is going to have the short squeeze, and that company is going to have the short squeeze. All have the same in common. Small float, bad performance, beat down 95% or 99% over the last 5 years. Easy to manipulate, garbage stocks. The point is to create the enthusiasm in yourself. The influencers buy early, then they convince you to buy, they convince you not to sell, and then they dump on your face. Now, why am I bringing this up? Because crypto will be the same thing. So when the bull market comes, garbage will go up. And in many cases, garbage will go up more than actually legitimate projects. That's the sad part. And it will open the door for a multitude of YouTubers to pump and dump coins all over their following, back and forth, and they will talk always about the next 10 coins to go up 100-fold, and next 10 coins that will do this, and next 10 coins that will do that. What you'll notice is every day there's a new 10 coins. Now, I don't know about you, but I don't have money to be putting, $1,000 per coin every time they talk about one. And what's going to happen is they're playing the odds game. See, so their point is to talk about enough coins that eventually one of them goes up. And then they will just talk about that one. non-stop, not like pretend that they never talked about the other one and say, if you join my private group, you would have known about this coin. Oh, if you join this, if you buy this from me, if you buy that from me, you're going to have access to this. But then, eventually, the bear market comes again. And all these people get caught off guard and they don't know anything. But the point, what they're trying to do is to create passive income to live off of you. That's it. So their ultimate goal is actually not making money with crypto, not choosing good projects, not talking about good features. For them is, okay, let me be lucky. After talking about 1,000 projects, eventually one of them goes well. And let me try to convince people to buy my stuff. And then I create passive income out of them. And if they complain or they say anything wrong in those, anything against it on those group chats, they get blocked and thrown away. So I'm just talking about this a bit more lately because I do believe the bull market in crypto is starting to approach. So we are going to see this explosion that I'm talking about, and things will get nasty very, very quickly. And guys, I think that's about it from my side. Thank you very much for being here. I highly appreciate it. I hope I answered the questions. And I will try, as I mentioned, to do one live stream per week. Sometimes it will be once every 2 weeks, depends a bit on my schedule. So thank you very much, guys, once again. And I'll catch you in the next one. If you're watching a bit later, drop that like and subscribe. It greatly helps the channel. So thank you very much, and I will catch you in the next one.